morning, everyone, and thank you so much for joining us for this special Money Map Millennial Milestone session on what you need to know when it comes to buying your first home. I'm Rachel Kelly, and I'm one of the co-hosts for Prime Time on Money FM 89.3, along with Timothy Go and finance presenter JP Ong. You can catch us every day from 4 p.m. till 7 p.m. on Money FM 89.3. Now, in this session, we're looking to answer all of the key questions that you might have when it comes to buying your first home, because property for many of us is one of the largest investments that we will ever make. And for many, it also serves two purposes. One, a safe place, a home, and a roof over our heads and the heads of our family. And two, perhaps as an asset that will hopefully provide some returns over time. But as a first time buyer, navigating these choppy waters isn't always easy. Do you want to look at freehold versus leasehold, private versus public? Well, to help us get the answers to all of these questions, it's my absolute honor to welcome with Ismail Gafoor, CEO of PropNex, who's joining us today to share all of his insights. Ismail, thanks so much for joining us.
Yeah, truly. Good morning to all the listeners and as well as Rachel. Really a pleasure to be here this morning.
Oh, Ismail, it's always great to have you with us. I mean, as the CEO of Singapore's largest listed real estate agency, you're the guy with all the answers.
Yep, I think we do have a huge amount of data, Rachel, because every day I'm looking at numbers, and PropNex have got almost more than 50% of the private and very close to 50% of even the resale market. We do have got real answers.
And we've not only got real answers, but we've got some real giveaways today for people joining us, don't we?
Yep.
So
Yeah,
that's
it's interesting. Yes, Rachel, as you said, the giveaway is going to be something very much of a real estate related, our very own PropNex Monopoly edition. Yes.
That's right. So we've got two sets of the special edition PropNex Monopoly. We've also got two sets of $250 in cash to give away. We'll be announcing the winners for those at the end of this session today. But what you need to know if you want to get your hands on that cash and those sets is type us a question. What would you like me to ask Ismail during the session today? And the two best questions from the session today stand the chance to win $250 in cash plus a limited edition PropNex Monopoly sets. Ismail, perhaps you can tell us though, what's so special about these PropNex Monopoly sets?
I mean, Rachel, really be surprised. I mean, I came from really a very not very well to do family, five brothers and one sister. We all grew up in a one room HDB flat. Basically, there's no room. We all sleep like a sardine, and my mom and dad really very worked very hard. The only fun that we had was Monopoly game, board game. As a child from 9 years to 10 years, my dad together as a family, we used to play that. But we had our own very rules because usual Monopoly can take 4 hours, but we played within 1 hour, 15 minutes. And that's what we have curated as a PropNex editions to really bring through the good values about the real estate market. Maybe if I share some of the slides, I very quickly
Mm.
just highlighted to you, Rachel. Um,
And that's fascinating, Ismail, as well. So this is something, this particular PropNex Monopoly set not only seeks to educate people about the property market here in Singapore, but this is something that's very personal for you as well, isn't it?
Yeah, truly, it's a journey that I've gone through, and I felt that it is only timely that we bring about this learning experience about the
Mm.
fundamentals of real estate because the board game is really curated such that there are Singapore's flavor, Singapore's rules, policies, and more importantly, the CCR, the RCR, the core central regions, and people to manage the cash flow. You know, the real estate, as you said, Rachel, it could be really, really daunting at the entry level. When one wrong move, people can go bankrupt. We are saying that all the bankruptcy cash flow management should be learned at the board game, and when we make the real decision, we should make it right 100% absolutely.
So we can all possibly become as successful as you, Ismail.
That's my wish to spread this. Yeah, I think, in fact, we have seen many Singaporeans are owning multiple properties or even
Mhm.
upgrading the right property that has got greater value over time. Yeah.
And speaking of getting to own the right property, so our viewers will be able to understand and learn more through this game itself. But during this session, we're going to break it up into two parts. So we're going to start off with some questions that we've received from listeners of Money FM 89.3 over the last 2 weeks. And then Ismail is going to share with us his thoughts and his key tips when it comes to buying your first home in a 10-minute presentation. We'll then take a quick break to take some of the questions that you've all sent in to us on the comment session now. And then in the second part of the session, Ismail is going to give us his outlook for next year's property market. I'm sure a lot of you are waiting eagerly to hear what he's got to say, especially in terms of where property prices have been going. We've all seen the news that came out yesterday. $29 million HDB flats sold in November alone. My goodness. So are these prices going to continue? Ismail's going to have the answers for us coming up in a bit. But first, Ismail, let's get to some of the questions that came in from our listeners over the past 2 weeks.
Yeah, my pleasure indeed. Yes.
Wonderful. So each of these listeners will receive a PropNex Monopoly set. And the first one is from Felicia. And Felicia asked, what advice do you have for those in their 20s to 30s planning to purchase their first investment property after owning their first home?
Yeah, I think definitely it is very important. And did you say that, Rachel, that they already own a first property and thereafter they
She
intending on
wants to
upgrade?
invest. Yep.
Oh, yes, that's right. So I think because the fact that when you say 20 to 30, I am not very sure whether the financial abilities are strong, because when
Mm.
you are young, you have not may not have accumulated huge amount of CPF ordinary account versus someone who's 40 or 45. Yep. So the definite first priority here is to make sure you're being prudent in your step. Actually, you have got two choice. One is to sell your existing property and to upgrade to a right size within your budget that has got a better capital appreciation in the near future. For example, if your first property was a HDB, you could always consider to upgrade to an executive condominium, which is hugely subsidized as Singaporean privilege,
Mm.
or a private property, which is either resale or a new launch. Second, if your budget really allow, if you're truly a high flyer, maybe a scholar, I'm really not so sure, then could you actually afford to buy two properties? But you really have to do huge sums of calculations and guidance, because one of the last thing that any of you should do here is to overcommit in your journey. Yeah.
And we did see warnings out from the Monetary Authority of Singapore this week. Don't overstretch yourself when it comes to property, especially given the current buoyant property market, didn't we?
Yeah, truly. Yeah.
So we've got another question that's come in. The listener hasn't given their name, but we'll get in touch with them. And the question is property an attractive investment for a couple below, say, 40, as the outlay is substantial, and other asset classes like equities may be more attractive?
I mean, put it this way, Rachel. In Singapore, we are talking about in the whole world, the highest percentage of population owning a
Mm.
property. And the government have made it so comfortable or at ease for entry. For example, Singaporean, whether you are a single or you are married, you are entitled to grant to buy a HDB property. And BTO flats are hugely subsidized. Not taking advantage to me is a loss, and therefore yes, there are other asset class that one could own, but the property certainly allow an individual to use first your CPF money. Can you imagine at the age of 30, 35, 40, 45, you have got a huge amount of CPF money and your ordinary account, you could invest in some other shares or so, but property allows a capital appreciation. And it has been proven, despite the COVID and the economic challenges the last 2 years, 2 years, Rachel, look at our property prices. It has remained resilient. Therefore, the answer is quite clear. Regardless of your age, whether you're 40 or 45, having your foothold in a property that within your means is the right thing to do.
And speaking of HDB, we've got a question that came in from one of the listeners as well. This is from Clifton Ong. And he said, since HDB is built for Singaporeans and owners are only able to own one, would you encourage eligible buyers to buy HDB first instead of purchasing a private property? And how do they weigh that decision?
That's definitely a very good
Hmm.
question, Rachel, from uh,
Clifton.
Clinton. Yes, Clinton. Yes, I would Usually in the past, our parents used to say this: your first property, buy a HDB, then you make your first pot of gold, then you go and buy a private property. And they were not wrong, because those days the HDB properties were very, very low price. My parents bought the first HDB for a price of 20,000, and they could sell it for hundreds of thousands. But that's
Mm.
not applicable today. Today, my advice will be this: it is not necessary that your first property have to be a HDB. The reason here is this: today, a BTO flat is only about 20 to 25% lower than a resale HDB properties. Therefore, even when you sell the property after 5 years of staying, fulfilling your minimum occupation period, your capital appreciation may not be huge, maybe 100, 200,000, depending on the location, unlike in the past. So what am I trying to say here is, if your affordability allow you to buy a bigger property, you may well choose to not buy a HDB, buy an executive condo. Especially if you're a Singaporean, I would say executive condominium is a huge value add, because it is hugely subsidized. But for those of you who don't qualify to buy an executive condominium because of your income has exceeded the
Mhm.
minimum sum, then you can well look into buying a private resale property or a new launch. Therefore, they should not necessarily be you must go one step by next. As long as you can afford, you can straight away bypass the hurdles.
And that was the traditional way of doing things, wasn't it? I remember when my husband asked me if we wanted to buy our first HDB, that was how we decided to get married before we'd actually told our parents we were getting engaged. So perhaps times are changing now. That's the Singapore engagement, isn't it? Anyway, speaking of HDB prices, with prices rising so high, we mentioned those $29 million HDB flats in November. Um, do you see the mature estates with bigger size holding value, or perhaps continue to have some upside through the decaying lease? This is a question from an unknown listener as well that was texted into Money FM.
Yeah, I think I can understand that
Hmm.
a lot of the concerns has been, first and foremost, are the HDB prices running away to a million, and what's next?
Mm.
Are all HDB property prices are going to be $1 million? The truth of the matter is not. These are very selective properties at central locations. Either they are with very, very huge amount of lease balance. That means probably they still have got 90 over years of balance lease, or some of the older but bigger flats. For example, the executive apartment and executive maisonette at Queenstown, at Bishan, in central location, do command more than $1 million. Then the question here is this: how long should one hold on to this property?
Mhm.
Just because it is bigger. I must say, Rachel, is true. There's a strong demand for bigger size HDB properties. At this juncture, $1 million is not a difficult thing to attain. But put it this way: lease decay will be a huge concern.
Mm.
Huge, huge concern. As long as there's a balanced lease of well above 60 years, I don't think it is a concern. But the minute the lease drop to below 60 and 50 and 40, the decline of the price will take a huge toll. Which means to say $1 million today, once the lease drop below 50, may no more be an asset class. It may start to come down to 800 and eventually maybe 600. A day will come like we witnessed end of last year, where there were 100 over owners of 60-year lease at Geylang residential all have to vacate and hand over to the state for a zero value. Because the truth of the matter is, when the 99-year lease expires, the HDB property or any lease property, the value is $0.
Is that the same then for 99-year leasehold private property?
Yes, that is applicable, because regardless whether it is a private HDB,
Mhm.
it is the same rule. Because a lease means at the end of the lease, the state will have to acquire the land and to reorganize based on the new master plan.
Okay. So we've got another question that's come in from Chris Nair, and he is a fan of your book, The Ultimate Guide to Real Estate Investment in Singapore. And he's asked, what are some of the pitfalls then that investors should look out for, and do these change with time?
The fundamental pitfall of emotional purchase, regardless of the time, will continue to exist.
Hmm.
Yeah. The pitfalls, what people have to look out for here is never to overcommit. Buy within one's means. always think of days when the economy may not be doing good, or you may lose your job. Do you have enough reserve? Because unlike other investment, property investment, you cannot exceed just as you like the next day. And if you're hit with being losing your job, or you're not able to keep pace with the monthly installment, it can take a huge toll on you. Therefore, my suggestion here is this: pitfalls, whatever I've even covered in my book, most of it will last regardless of whether now or 10 years down the road. What is important here is this: any buyers, we will always have to be a little bit more prudent in our investment outlook and not to be speculative, especially when it comes to real estate.
Okay, Ismail, great insights there. And let's get down to the details because you're going to give us a presentation now on what buyers need to know when it comes to owning their first home.
Yep, I think indeed by pleasure. Let me just highlight this. Um, Maybe I think some of the do's and don'ts for the first time home buyers. I mean, we have been talking about it, and some of the questions that people are really asking here is this: what should one look out for, especially if you're a first time home buyers? Uh, Doing the budgeting is extremely important. But on the other hand, not buying a property is a wrong thing to do. I have encountered some of the people says that they want to buy a dream home, and that is a big property, and they want to save enough to accumulate. But that is a huge mistake, because I would always prefer to enter the real estate market with a foothold. Doesn't matter if it is a small home, it doesn't matter it's a 3 room HDB flat or a 2 bedroom private property. So doing your budget is most important. And obviously, you also have to do your checks. And what do I mean by the checks? The future upsides in surrounding the area. All property prices will only appreciate based on what it grows over time. The surrounding, is it close to amenities? And is there a workforce where you can rent out in the future if you choose to? So we have to do enough staff checks as far as the property's location is concerned. And the third point here is this: never be emotional. I have seen people looking at a resale flat, and then they like the way it is being decorated or renovated, and they immediately make an emotional decision, and sometimes even end up paying a higher price. And I must say this: when the existing owner remove all his paintings and all his furnitures, suddenly the bare unit look like, what, how come did I pay so much more? So that's why I say that buying a property, yes, every purchase there's an emotion, but we cannot be too emotional about wanting to buy a property. And the fourth point is, do not speculate. Speculation here is this: some people tend to buy a property hoping it will appreciate because some of their friends have earned huge amount of money. No, no, no. Because there is a huge risk, because for whatever reason, if the economy does not do well and you are expected to hold on to the property during the crisis, and if you can't hold on, it may cost you hugely. You may even go bankrupt. So the best way is not to speculate. Buying a property should be mid and long term. That means you must have the ability to hold on to the property 5 years and beyond. You must decide when to sell, and not the banker decide for us when to sell. When the banker decide for us when to sell, most of the time we will be in the danger zone. Last thing, don't think buying cheap is good. For example, a property can come very cheap because its location is facing very adverse, or it could be facing a cemetery, or it could be facing a rubbish dump, or it could be because it's so cheap because the balance lease is probably less than 60 years. But after you buying, you must always think of one thing: your exit strategy. Because we are going to put in a lot of our hard earned money. We want to make some money when we exit, and therefore you have not just look at the price being cheap. These are some of the fundamental basic things that one can look out for. One of the questions that I earlier also answered here is, should one buy HDB or EC or private condo? It really dependent on each and individual for you. I mean, if you really have a starting new young couple, just enough savings, it is really no harm to start with HDB, BTO, or resale. Because for resale HDB properties, you can well get up to $160,000 of grant, but it is depending on your income ceiling. It will slide down if your income is higher. or a BTO as well. Executive condominium is only a Singaporean privilege, and after 5 years of TOP, you could just sell it to another PR, and after 10 years, you can even sell to a foreigner. The income ceiling cannot exceed $16,000 if you're looking at executive condominium. And obviously we have private condo, and that's, you have all the luxuries, you can sell at any time, you are not restricted by any of the rules. But having said that, you must also be mindful in terms of your budget, whether you can afford. So obviously these are all the options you have if you are a first timer, and I would suggest you don't need to go the path of the first step, second step, third step. You can jump straight away, and my guidance will be going for executive condominium is definitely a winner, because you will be able to make a huge upside. Let's moving on. Let's say, for example, now within the HDB flats, you have got a decision to make. If you are going for a BTO flat, the mature estates, the waiting time on average we have computed is about 4.9 years. But actually, some of the development can come to almost close to 6 years, 5.92 years for River Peaks that was very recently launched. And for the non-mature estate is 3.6 years. Therefore, if you're a young couple and you intended to get married, not forgetting the fact that you have to time when are you going to have your children, your babies, and you need to have a helper. Are you going to stay with your parents? Do you want your own home? And therefore you need to strategize right, whether are you going to go for non-mature estates or mature estate. Alternatively, you can always buy a resale flat of your choice, taking the grant, and that's what is happening in the market right now. Okay, the last point probably will be, what is worth considering as far as HDB resale versus BTO? You know, BTO, one of the good thing here is this: you get a very fresh lease of 99, and therefore you got a good time to stay there and then subsequently upgrade or right size. But the only downside here is this: you have to wait 4 to 6 years before you could collect the keys. Therefore, you must imagine, uh, you have to visualize a BTO flat. If you take 4 to 6 years, assuming you apply one and you get it 5 years later on average, and thereafter you can only sell it another 5 years because you have got a minimum 5 years of MOP. That means whatever you are applying as a young couple now, you can only sell that property 10 years down the road. And in that 10 years, huge things can change. If you have two children, if you are going to have a maid, if you are going to bring in your parents to stay with you, is the house that you are buying right size for you to grow into it over the next 10 years? These are some of the consideration you will have to do as far as the BTO flats. As far as resale flats is concerned, I would suggest you buy one that the lease has got at least more than 70 years. So therefore, it's okay to buy a 10-year-old or 20-year-old property. If you're buying something that it is more than 30, 40 years, you just have to be mindful that the lease decay may have got some impact in your future capital appreciations. Okay, one of the greatest advantage here is this resale flat you can choose and pick. And believe me, some of the resale flats are so beautifully renovated by the current owners, where you may just move in within a designer decor house, but it may not come cheap. Yep. So these are some of the pointers as far as the HDB resale versus a BTO flat. So overall, for the time being, maybe for the first part, Rachel, I think these are some of my advice to the first time buyers.
That's wonderful, Ismail. Thank you so much for sharing all of those insights. Really useful points as well, and tips on what you need to consider when it comes to buying your first home. And we had this question from Rachel Lim that came in, and I think this really ties in nicely with the start of your presentation, because she's asking, we always hear that it's location, location, location. Is that really the case when it comes to buying a property?
I think I wouldn't say it is overly used, but of course location matters.
Mhm.
But sometimes when we talk about location, people tend to think that, hey, is it location we are talking about? In Singapore, where's the best location? Probably everybody should be staying at Orchard Road. That's the best place. So it does not necessarily mean a location means it is in a prime location. Location can be defined as you can buy a property at Pasir Ris or Woodlands, or for that matter, even at Orchard Road. It really doesn't matter. Okay. But what matters here is this locality of the development or the property you buy within that location. Let me explain.
Okay.
What it means here is this: if you are buying a property at Woodlands, I think it's okay. But then the question, the property that you're buying, how far away is it from the MRT stations? How far away is it from the other amenities support system? And the locality of your unit, does it face the harsh afternoon sun, or does it face an expressway? Is going to be noise pollution, or is it facing a rubbish truck way? So these are the things. So location is huge in real estate. When you take into considerations of all the finer points about location, the future upside of the property will be better preserved.
So, moving on now from we've spoken about 99-year private and HDB flats as well. Let's talk a little bit about freehold. We've had this question that's come in and it's from a unnamed caller, but we will get in touch with them for their details. And it says freehold properties certainly fetch a premium in pricing over leasehold. But why are many leasehold properties today able to command similar price levels to freehold properties?
Yeah, I think it's a very, very valid question. This is not the first time I've been asked this question.
Mhm.
To start with, freehold properties are to me is like in a gold standard, because it is really a legacy planning where you can pass on to the next generation, preserving, because the lease is freehold forever. Yeah. And why some of the newer launches 99-year development prices, some are even higher than the freehold, is mainly because of the existing freehold properties has been in the market for some time, and the conditions have deteriorated over time, and the technology, the space planning and all other things may not be up to the current newer homes that are with smart fittings and all other lifestyles. So, yes, you could buy a freehold development almost about the same price as a leasehold new, but people sometimes like everything to be new, and that's why they are prepared to pay a premium. But on the other hand, it is given, if there is two new launches, one is a freehold, one is a leasehold, the price will never be the same. The freehold development will command close to 20% more. If you're buying something at $2,000, a 99-year leasehold, a freehold, you will have expected to pay $2,500. So if you're paying a $2,000 for a leasehold, and if you can find another freehold about the same price, that freehold is likely to be in the market almost 20 or 30 years already. And that's why there is a price discount.
Ismail, are all freeholds created equally, or are there certain types of freehold properties that move much faster when they're on the market?
I think one of the key thing here is ultimate for all listeners out there. Believe
Mhm.
me and trust me. If you can buy a landed property, freehold, regardless of the type, it doesn't matter even if it is an inter terrace at $3 million, or a corner terrace at $4 million, or a semi D at $5 million, or a bungalow at $6-7 million. It is ultimate, because if you understand Singapore is land scarce, having a landed property freehold development will certainly appreciate over time. Let me just give you a little bit of a glimpse. Some of you will be so surprised to know. 70 years ago, my neighbor, who's just my just opposite neighbor, bought that particular plot of a 4,500 square foot land for a mere $45,000, and they just sold this year, and the transaction was just completed 2 weeks ago, and the value is well above $5 million, and the property is the same
Mhm.
state as 70 years ago. No changes. So it is livable, but 70 years ago structure. And 45 have gone to $5 million. And that's what we are talking about: gold mine, landed properties.
But it's not always easy to find those pockets of value within the freehold property market, especially for landed. So what about freehold condos? What type of freehold condos should we be looking at, or any freehold condo? Is that the case?
No, I think generally, as long as it is a freehold condominiums, is perfectly all right.
Mhm.
You can be in any part of Singapore. It's still good because the rule of the thumb here is this: a freehold condo, one could utilize it forever. But if you want to, you see, I don't want people to speculate because you need to have a
Mhm.
lot more understanding of the knowledge. But obviously, people do ask me, should I buy this almost dilapidated or very much older freehold because I'm hoping for it to go on block? Yeah. And if it goes on block, I may do get a windfall because it is
Mhm.
freehold development. A new developer can buy it and definitely do it in much more in a better scale. But the question here is this: one cannot jump into this in a speculative way unless you have a good understanding the plot ratio, the master plan, is there height restrictions. If all these things is understood, then yeah, why not? If you buy an old freehold condominium or apartment, knowing that it's just a matter of time, it may go on block, but you must have the holding power. How if the on block don't take place? You still must hold on to the property.
Okay, so let's talk about when to buy. We've got another question that's come in and it says, for an existing home owner, which type of market is better for upgrading? A rising market or a declining market?
Okay, to me, honestly, Rachel, both market is all right, but your action have to be different. Let me just explain this. What does it mean by rising market? That means you may not be able to catch the tide as fast because if can you imagine in a rising market, I sell my property to $2 million and I intended to upgrade to a property that is 3 million. But by the time I sell, it takes some time for my funds to come. And then I wanted to go and commit to the $3 million property because the market has
Mm.
been moving so fast. The 3 million has become 3.5 million. You saw the risk? Yeah. So what am I trying to say? In a rising market or declining market, it's okay, but your actions have to protect yourself. So what I would do here is this: in a rising market, the ideal scenario here is I will buy a property at 3 million first if I can. Then, since it's rising, can I sell my $2 million property to 2.1 or 2.2? So I benefited in a rising market by securing a unit at the price that I can afford and disposing my unit at the better price without being taking a risk of a runaway prices. So on
Mm.
the other hand, in a declining market, what it be good here is this: it is always good for you to dispose your property so that not you commit to something at 2 million and eventually your property slide down and then your budget goes run out of what you have planned for. So truly it really doesn't matter, but you really need to be prudent in making sure your interests are protected.
And speaking of interest being protected, let's talk about interest rates because we are looking at rising interest rates on the horizon. And considering that bank interest rates will likely go up next year, we've got this question from Lek Yu Meng, and he said, which could affect the buying interest and home price may be softer. Is it wiser to hold off buying until next year?
I think all the more you should, whoever it is, should consider. You see, actually, honestly, Rachel, it is not about buying this year or next year because it's really, truly very difficult to predict
Mm.
exactly. If every one of us are able to predict and we have a crystal ball to really game the market, it would be so much easier. It's not possible. In any case, I've already highlighted whoever who enter the market, we are not speculative. It really doesn't matter if the interest rate goes up by another 1% or if it is just move along that way, as long as we have the holding power. We have to enter the market now within our means, and we must have the ability to hold on for minimum 5 years and beyond. So interest rate may go up next year, it may come down the following year. One of the key thing here is this: it is just not one thing that will dictate price increase or price decrease. It doesn't mean if next year the interest rate goes up by 1%, prices are going to drop. We will also have to take a look at the balance stock, the demand, the resiliency of the market, the income generation by the household. So all these things put into factor. I am looking at next year, which probably the next second part, I'm going to give some further information whereby we are expecting a resilient market next year, regardless of a minor interest increase.
Okay, Ismail, and you read my mind. It's time for you to share with us your outlook for 2022. Before you do, just a reminder to everyone who's joined us today, you can ask us whatever questions you would like me to ask Ismail. I'll ask it after his next presentation. And we will pick the two best questions. And for those two people who have asked those questions, you will win $250 in cash plus one of the special edition PropNex Monopoly sets that Ismail was talking about earlier on as well. I also want to ask all of you, from what Ismail's shared so far, what are your thoughts? Leasehold versus freehold. We're going to pop that question up. Let us know what's your preference. And with that, Ismail, I'm going to leave it to you to share with us your outlook for 2022.
Yes, maybe if I can bring my slides again, I would just like to just highlight some of the pointers that probably I would like to share, looking at the market for next year as well. And maybe I hope a little bit of a busy slides. I hope the listeners can just focus on some of the key pointers. The outlook prediction on home prices. So from this particular slide, what we have seen here is this: the property prices for both the private and as well as the public housing have done very well. And therefore, we have seen the property prices are expected to go up this year 5 to 6%. And in public housing, it is going to be a double digit growth. So, why is this the market is so resilient? Couple of reasons I must say. Obviously, there has been a strong demand in terms of buyers who are picking up, and even working from home means there are people who are trying to right size their property. And what we have witnessed here is this: as far as we look at it, the in fact I've given here three different bar charts, looking at HDB resale volume, private resale volume, and as well as the private new sale volume. So this year we are expecting the HDB properties to cross 30,000 units. And when you look at it in the previous year, there were only about 20,000. And that's a huge increase. People are just buying public housing. One of the reasons is also because of the delay in the construction, and therefore people having to wait a good 4, 5, some places almost close to 6 years, have prompted more people to look at resale flat. Therefore, today, as today's article in the news media have highlighted, that there were $29 million property were transacted just in the month of November, and well above $220 million properties were transacted for the first 11 months. Therefore, the demand for public housing or resale market is going to be resilient. And the outlook here is this: next year, we think there will probably be another 30,000 units being sold. Okay. Next, looking at the private resale volume. Look at it. Last year, there were only about 10,729 units were sold. But for this year, we are expecting a 19,000 units to be sold. And that's almost a double in numbers. And where does all this demand come from? Yep. And we have also seen a fair number of HDB upgraders. And when the minimum occupation period being fulfilled, a lot of HDB owners are also right sizing and also upsizing. And more importantly is the lifestyle, especially in the last 2 years. Work from home, people wanted that little bit of a luxury, the facilities, the swimming pool, the clubhouse, and that seems to be the trend for this year. And we are expecting next year. I've been a bit conservative, though, I must say. For next year, my prediction is only 18,000 versus this year's 19,000 for the resale, simply because I think there was a little bit of a pent-up demand this year. As far as new launches are concerned, last year there was only 9,982 units were sold. For this year, we are expecting to cross the 13,000 mark. And next year, probably about 12,000, mainly because the stocks are running low. For example, 2 years ago, we had 36,000 unsold units, new launches. But today, we barely have about 16 to 17,000, half the amount have been sold. In fact, more than half have been sold in the last 2 years. So, looking at it again, therefore, the question people have been asking here is this: should one wait to enter the market now, or should we buy later? okay, or buy later or buy now. Just giving you a glimpse of this is just the executive condominium. You know, executive condominium is hugely subsidized, and the land prices over the time in 2018, the average land price of the three condominium development was $572. The following year was remain at 572. 2020 was 566, and it went up to in 2021 to $631. In fact, the Tampines site got it at 650 over dollars per square foot per plot ratio. So, what is the land price going to be for next year? So, what am I trying to say here is this: the increase in land cost will means the overall selling price is not going to be cheaper. And the same thing, I'm looking at the outside the central region, the government land sales. 2017, the average price was $707, went up to $844. And this year is to $1,161 is the average land price at Lentor and Amokyo, which means this development will only be launched next year close to $2,000. So, therefore, looking at the price, looking at the demand, what I'm looking at it here is this: the prices are expected to remain resilient next year. In fact, for those of you who are really keen, it may be well worthwhile to do your sums right, speak to any of the professionals, and maybe it's good for you to enter now, buying at today's price, which are expected to be slightly lower than the future launch prices. Rachel, I think I will stop here. Maybe there are a few other questions.
There are more than a few other questions. Ismail, I think everyone's very excited about the information that you've shared with us today. Perhaps I can start with a question that has just come in from Han Ming, and he's asked, there's a fear of rising mortgage debt ahead of potential interest rate hikes. We spoke about that briefly earlier on. What are some of the key pieces of advice that you can share with new buyers who may face a sizable long-term mortgage obligation?
Yeah, I think this is a very valid point. There's a Han Ming. The key thing here is this: we are quite lucky being in Singapore. I must say, the main reasons here is this: the government have put in place huge number of policies. The first thing is total debt servicing ratio. That means one cannot overcommit in order to take the amount of mortgage loan. Number two, even based on our current income, your amount of loan is calculated based on the interest rate being at 3.5%. What I'm trying to say, even though you can secure your loan today at 1.5% interest, but the bank disburse counting your affordability at the interest rate at 3.5%, a buffer of additional almost 2%. In other words, they have done the sums that even if the interest rate goes up to 3.5, you can afford. Yep. So these are some of the current policies that are already in place. But if you want to be a bit more prudent, what we could do, because mortgage loans are long-term obligations, you could always keep some of your CPF ordinary account in your CPF account itself, which means to say, if you have your ordinary account 200,000, 150,000, you may keep 30, 40,000 and not utilize everything in the purchase of your new property. Why? How will this come in handy? For whatever reasons, if you want to change a job and therefore in your CPF you got enough excess that you could utilize to tie over the next 6 months installment or so. So if you don't have CPF, you can always have reserve cash. So it may be prudent for you to have some of the monthly mortgage, let's say for another 6 months mortgage as a savings. As long as one have planned towards this, I think you will be able to ride through, because our parents have ride through. Many of our friends have done that the same thing. And it is our journey to plan and do the right thing.
And Ismail, we've spoken about different types of property, freehold versus leasehold, but what about different types of mortgage then for first-time buyers? Fixed versus floating, HDB versus bank. What are your thoughts?
Yeah, I think this is very personal call.
Mhm.
A little bit of a risk involved. One of the advantage of a fixed interest rate, it gives you a peace of mind, regardless of how the movement of the interest rate. There are banks that can give you 3 years. Some very at a promotional can even have up to 5 years fixed interest rate. Basically, it means here is this, but you may be paying slightly higher than floating interest rate, but you get a peace of mind and you are buying safety with all the likelihood of, even if the interest rate goes up in next year, the following year, your mortgage installment for next 5 years is going to be the same. Therefore, if you are concerned and if you think that you can't sleep well, worrying about interest rates hike, then go for a fixed, knowing that you're going to pay slightly more. But if you think that you have enough reserve and your safety net, then if you are gung ho enough, and I'm one who always go for floating rates because I want to save the money. But you can do that, but you must do your sums right. So there's no right or wrong. It is a very individual call. As far as HDB loan or as is it a bank loan, it is all right either way. One of the key thing here is this: HDB interest rates never change because it is at 2.6, is a factor above your ordinary account CPF 0.1. So you have a very stable interest rate as far as HDB loans are concerned. Bank, you can get it much cheaper, but you will also have to take note of when it goes up, you will have to pay a higher price.
Okay. And Ismail, earlier on, you shared that, it's all about long-term planning when it comes to buying a property, looking down the road. How are your family needs going to change? Are you going to have children? Are you going to need room for a helper? What about your in-laws? Are they going to move in with you as well? But what about the long-term trends that we see when it comes to Singapore's population and how that might impact property trends as well? So we've got this question from Christopher Young, and he's asked, will the aging population and the subsequent downsizing of their property size impact the supply in the next decade?
I think we are, again, I must say, blessed, Rachel, and as well as Christopher. I think you are thinking ahead, which is very good thing. Aging population and so on. But put it this way: it's just a matter of time. Singapore population will increase over time. Either Singaporeans giving more birth, or we are bringing in the right immigrant to be Singaporean in time to come. With exactly as you said, with the aging population, we need someone as taxpayers to upkeep the infrastructure, the MRT that is at every doorstep we desire to have, and all other things put together, and as well as the economy and the workforce. So it is either way, in my opinion, this is my personal opinion, Singapore population will have to continue to increase with the right talent of people coming to stay in Singapore, either through a temporary pass, or could be a permanent residence, or eventually citizen. Therefore, based on our Singapore size, I expect the demand to remain resilient. And one of the advantage or the blessed thing that we have a government that is very much very forward planning. So I'm not expecting that to come 10 years down the road, just because of aging population, we are going to have a glut situation of a supply of a bigger flats nobody want. So not to worry so much, Christopher. I think we are in good hands.
Okay, thank you for that, Ismail. So we've got another question that's coming in. This is an interesting one as we talk about property investment and upgrading. And we had a question that we spoke about earlier on, someone who is looking to buy their second investment property. And this question is, do you recommend decoupling to buy property to avoid additional buyer's stamp duty?
Yeah, I think if you can afford it, I mean, when I say afford it, means if you qualify by decoupling and yet you can buy two property, I think that is a good option seriously to consider. I mean, to all other listeners, if you're trying to understand what is this decoupling are we talking about?
Mm,
So basically, for any Singaporean, when you buy your first property, you are subjected to the basic stamp duty of about up to 4%. But all subsequent property, you are expected to pay a higher stamp duty, which we call it as additional stamp duties, depending, it could be 12% or 15%, or depending on is it your second property or your third property, and it goes along that line. Therefore, the question was asked here is this: if you're a couple, husband and wife, currently both of you own one property, and if either one of you buying a second property, you will be subjected to additional stamp duty. The smarter way here is this: you decouple. That means your current property you assume under one person. That means, assuming right now husband and wife is owning 50-50%, I transfer my 50% to my wife, and my wife owns the entire 100%, while I go out there and buy a second property, and that's considered as the first property, and therefore I need not pay additional stamp duty. So is it a wise thing? Definitely it's a wise thing. But the question, not every couple will be able to do this, Rachel,
Mm.
because each individual must have the earning capacity to hold on to that individual property. So for those of you who can afford, I think this is a very great choice to do.
And speaking of those cooling measures, with the additional buyer stamp duty that we saw introduced a number of years ago, with the recent announcement from MAS and warnings from MAS this week that we spoke about earlier as well, do you think that this could signal property cooling measures on the horizon? This question again from Christopher Young.
Yeah, I don't think so. And I will tell you the reason why. I think MAS does very often, whether it has been prices going up or not, and periodically they will update in terms of the ratios of income and as well as debt and all other things. But what is a clear signal of a cooling measures will be runaway prices, which means to say, if the property prices start to go up closer towards double digit in last 12 months, that's a no go to our authorities, because that's not sustainable. If property prices goes up by 5 to 6%, which is expected in this year, I think it is more or less slightly above inflation. That is doable. So as far as concerned, government try not to interfere too much. But on the other hand, if the property prices growth are not sustainable, and that's not the right thing, therefore you can expect cooling measures. So all said, nobody is wiser to be able to say when the cooling measures come. The question here is, regardless of whether there's a cooling measures or not, have we planned our journey right in our real estate investment to ride over crisis? That's the most important thing.
Thank you, Ismail. And speaking of changing landscapes, we've got another question that's come in here. But how, maybe I can summarize this, how could a potential shift in the political landscape perhaps impact Singapore's property market, if at all?
Good. I think the good thing here is this: regardless of the political landscape change in Singapore, we had the benefit of a very strong forward-looking government. And I don't think it is a one-man government that make a decision. It is a holistic support system that Singapore has been enjoying in terms of leadership and the team that can carry us through. So I've got great confidence in our Singapore's not only real estate market, but the government that is looking after the interests of the people, and as well as everything put together. Real estate market is expected to be resilient in coming years.
Okay. Well, Ismail, we've got just about 5 minutes left, so I'm just going to pull one more question before we wrap up the session for today. And this is this is an interesting one as we're talking about maximizing profits for property. What about renting out my HDB flat and still owning a condo at the same time? Or how can people better maximize the profits of their or potential income from their current properties?
One will have to really look at all the current policies,
Mm,
because first and foremost, if you're owning on to a current property and if you're buying a second property, will you be subjected to the additional stamp duty? Okay, so there will be different situation for different people, but there could be someone before the ruling has came about. If you're already owning two property right now, yeah, then you want to rent your HDB, and while you're staying in your private property is perfectly all right, because you can generate an income. But HDB has got very stringent guideline and rules that who you could rent legally, and you must get the necessary approval. So you try not to, and one should never play the rules to take any
mm,
risk. Then HDB can even forfeit or take back your property. So it is not a bad idea. I've seen many customers who have already fulfilled the legal obligation of minimum occupation period, and they own it right, and they are renting out the HDB to generate an income, and while they are staying in a private property or owning a private property, that's perfectly all right. But one of the key thing I want, and all the HDB owners who are owning more than one property here, is this: you must be mindful of the lease decay. We have witnessed
mm.
properties that were, for example, at Mountbatten HDB properties. Today, the balance lease is less than 50 years, 47 years. The three-room properties 10 years ago was about 350,000. Today, the property is only about 250,000. Holding on to the property when the lease drops doesn't mean it is worthwhile. It may be better for you to dispose the property, cash out, and reorganize your portfolio rather than holding on, collecting rent while your lease continues to decay.
Okay, and so just on the back of that, well, I know I said that was the last question, but I've got one more from Nurul because I think this is a nice one to summarize with and wrap up the session. That's how can I then maximize profits from a property sale?
Norul, I think you should speak to me. No, okay. No, why do I say that? Here is this. I think what's most important here is this. First and foremost, if you want to maximize profit, get a good professional to advise you the
Mm.
right strategy. Number two, declutter your home because it is the experience that you're going to give to the next buyer. So throw away things that is not needed, and then if there are anything that need to be repaired, for example, if there is ceiling spalding or if there's some rust in it, try to just do this touch up. Some of the consultants can even help you. If it is an awakened house, we can even do some staging, which means we bring in the furnitures and give that mood. Because as much as we said, buying is an experience. So the best way here is, in my view, is to get professional advice, get the right pricing, tidy up the house neatly, and I would still suggest get one good salesperson on an exclusive to hold on to your property, then engage multiple agents who will compete and will not protect your interests. So with that, I'm quite confident you'd be able to get the best possible price.
Okay, well, Ismail, thank you so much for sharing your insights into all of the questions that we've received from our listeners at Money FM 89.3 over the last 2 weeks, as well as all of those who have joined us here today. And as we shared, we are going to be announcing the winners for the $250, the two sets of $250, plus the two sets of Monopoly that we've got available to give away at the moment. And the winners are, drum roll please. Okay, anyway, the winners are KW Chow and Han Ming. Thank you so much for sharing your questions during the session today. I hope that you've enjoyed the session and that you've gotten all the answers you need. And you know what? This is going to be available online as well. So if you want to listen back to all the valuable insights that Ismail has very generously shared with us today, please feel free to download it, rewatch it, share it with your friends, whoever you think is going to benefit from all of the wonderful insights that we've had on the session today. And Ismail, once again, thank you so much for joining us, for sharing with us all the insights on what people should look out for when buying their first home. Applicable not just to first-time buyers, though. I mean, I myself have learned so much today as well, and obviously for your outlook for 2022.
Thank you so much, Rachel. Greatly appreciate to all the listeners. PropNex Monopoly is worth buying a set and playing because something big is coming next year. Really big is coming next year.
Wonderful. Well, thanks for that. What's coming next year?
No, we are going to bring this learning experience to outreach to almost every single people out there. Yeah.
Wonderful. Well, thanks for that, Ismail. And thank you again, Ismail and the PropNex team, for being so generous and sponsoring these 12 PropNex Monopoly sets that we've given away over the last 2 weeks, as well as today, and the cash prizes for today's session as well. It's been absolutely wonderful listening to you and talking to you as always. The one and only Ismail Gafoor, CEO of PropNex. Everybody have a wonderful day. Thank you.
Yes. All the best.